A very good morning from Khandwala Securities Limited and welcome to Tuesday's trading action at Dalal Street dated June 14th, 2022. The breaking news this morning is that overnight at Wall Street, the S&P 500 entered bear market territory and for the first time since 2020. A bear market is defined as a 20% loss from a recent high. Global stock markets are seen tumbling and bond yields jumping as fears over inflation seen rattling investors around the world. The US consumer prices rose 8.6% year over year in May, the fastest such rise since 1981. A hot inflation reading is bolstering expectations that the Federal Reserve will continue to aggressively hike rates in the second half of this year, even with signs of economic slowdown. Amidst this backdrop, all eyes will be on the Federal Reserve, which holds its two-day meeting on June 14th to 15th. The Fed started raising interest rates in March and implemented a 50 basis point hike in May, its largest in 22 years. The latest FOMC minutes have pointed to further aggressive increases ahead. So, economic projections and Jerome Powell's commentary will be closely watched on June 15th. The street is already expecting 50 basis point rate hike in June policy meeting. That brings us to our call of the day, which suggests bears will continue to attack the Dalal Street. Nifty should nosedive as inflation remains a hard beast to tame. Perma now need to rethink on their rosy projections as the ground reality suggests that Nifty shall drop to its March lows of 15,671 mark. Now, before we get into details, here is the preferred trade on Nifty and Bank Nifty. Nifty closing price 15,774, sell at current market price, strict stop at 16,207, target 15,671 and then at 15,311, aggressive targets at 14,251 mark. Bank Nifty closing price 33,406, sell at current market price, strict stop at 34,711, targets 33,001 and then at 32,751, aggressive targets at 32,000 mark. Flight to safety remains the preferred theme across stock markets across globe. Nifty 2 is likely to continue suffering heavy losses as the US dollar remains the preferred destination. Please note the FIIs have been net sellers for 8 consecutive months, net offloading more than rupees 3.45 lakh crore since October 2021. The net outflow by the FIIs from equities has reached rupees 1.81 lakh crore so far in 2022. In the June month so far, FIIs have net sold shares worth rupees 22,979 crores. In yesterday's trade too, FIIs sold shares worth rupees 4,164 crores. FIIs selling likely to intensify as macro data on the inflation front continues to dampen sentiments. Risk averse from the FIS camp will continue to be the preferred theme as long as Dalal Street is surrounded with uncertainty evolving around Indian economy amidst inflationary concerns, monetary tightening, elevated crude oil prices, geopolitical crisis, lofty valuations, depreciating rupee, and recession fears. The US 10-year Treasury yield spiked to 3.34%. The street now expects it to flirt with 4% by the end of 2022. Soaring bond yields will continue to slam stocks as concerns about a recession mount. The Nifty options data for June series suggests Nifty is likely to be in a trading range of 15,500 to 16,700 zone. Maximum call open interest is at 17,000 followed by 16,500 strike price. So 17,000 mark will be Nifty's crucial resistance zone. Maximum put open interest stands at 16,000 levels followed by 15,500 levels. Call writing was seen at 15,800 strike price and then at 16,000 strike price, while there was meaningful put writing at 14,500 and then at 15,800 strike price. Our chart of the day is bearish on stocks like IndiaMart, Indiabulls Housing Finance, Dixon Technologies, and Laurus Labs. That's all we have for now. For any queries, do contact us at 022 4076 7373 and do visit our website www.kslindia.com. Thank you and have a profitable day. Please note that the stocks mentioned in this podcast are only for educational purpose. Khandwala Securities Limited or any of its employees shall not be held responsible for any investment or trading action undertaken by any person based on the stocks mentioned in this podcast.